Hello and welcome to Leviathan News. Today is September 5th, and joined by Amplice from Gearbox. Welcome, sir.
Hi guys, how are you all doing?
Yeah, I'm good. Are you based today?
I'm always based.
Yeah. So Gearbox has recently launched some curve integrations, which seem pretty nifty and offer up to 5x leverage. So maybe we can start there and kind of go off of what this latest release has done.
Yeah, sure. So yeah, Gearbox, it's been months in the making, to be honest. Gearbox, we were calling it V2.1, but at this point, I think we're close enough to V3 where I don't know if that's useful nomenclature. But basically, we introduced Curve V2 integration, which allows for, like you said, 5x leverage on a bunch of pools, including, I think the most probably important one is the Try Crypto. So that pool on Curve V2 with ETH, BTC, and stables, which is probably going to be like one of the more popular pools both on Gearbox and on Curve. But also Lido ETH. If you're LPing Lido ETH, you can now LP with leverage, and the same thing with Convex ETH. And technically also the CRV ETH, although I'm not sure that that pool has any liquidity anymore. So, yeah.
Very nice.
So when you say Try Crypto, which Try Crypto? Because there's now a few of them.
So it's let me see. It's the BTC ETH stable pool. Hang on. Let me just look. It's the, I guess, like probably the one with highest TVL, and probably the one that was like the one that's considered the canonical pool. I don't know what I'm not as up to date on like what all the newer Curve V2 pools are, but
just with checking.
Yeah, so it's Curve.
One thing phased
it's
out.
USDT,
so
yeah, USDT, WBTC, and WETH. It's Try Crypto 2 is the one in the screenshot.
Okay, so that's actually getting phased out. So be a little bit careful on that one.
Well, I'm sure. So with the thing about Gearbox is once like a protocol is integrated, it's actually relatively straightforward to implement new like individual pools, right? So once we have the Curve V2 integration, adding additional new pools is just a matter of getting the risk people to be like it's relatively safe. So that should be a problem. Like if they update the pool and the pool has similar amounts of liquidity and holds similar assets, then we'll probably integrate it pretty quickly. That's my guess.
So just to take a step back, I mean, we're all in the know about Gearbox, but for anybody who doesn't know about Gearbox, like what's the 30-second spiel about it?
So the 30-second spiel is fully on-chain composable leverage where you don't have to give up custody, basically. The way that I like to think about it is kind of like almost like a smart contract wallet that has leverage built in, but the flip side of having leverage built in is you can only ape into relatively safe stuff. Yeah, that's how I think of it. And probably increasingly that's going to be what we're building towards, I guess, given the way that people are talking about account abstraction and all these things. That's maybe more and more going to be the framing. But basically, it's a composable leverage protocol that's like fully on chain and non-custodial.
Yeah, it was one of the really interesting how it got built. I mean, essentially coming out of the yield hype of DeFi summer, this was like the first product that essentially gave you leverage on your assets without having to, essentially like creates this little box, like a little box that you can run strategies in and borrow assets from other people. And it's pretty cool. I mean, I think it's a really unique product that is not seen anywhere else, and it hasn't been forked either, which means that the complexity of it must be quite high. That for someone to come along and try to recreate the project is
it's definitely not easy. It wouldn't be easy, I think, for somebody to fork Gearbox. I don't think it's technically been forked. I believe there other projects that have tried to do the same or similar things, especially on, I think it was on one of the L2s. I won't name the project, but I believe they got hacked. So
Yeah.
there's that. I mean, definitely under the hood, there's a good amount of complexity. I think also Gearbox has like a very high commitment to security. So we often like want to release stuff way sooner than we actually can, because we wait for not just audits, but like Mikhail and Ilgiz and all the other devs and GigaBrains are like really like combing through to make sure everything's safe. Because that is one of the drawbacks, I guess, of like, so just to go back into DeFi history, but like there was like Alpha Homora, right, which allowed you to lever up on certain pools. But the difference between what they were doing or what they're doing and what we've done is that our box, like you said, it's literally like we created a primitive called a credit account, right? And it's kind of like a box. Like you put assets in, then you can do a bunch of stuff with those assets, and then when you're done, you can pull your assets out. But the way that we've done it is like it's really generalized. So like as we integrate more and more things, like just the number of different combinations that you can do from your credit account are gonna like increase exponentially, right? But the downside of that is like if something goes wrong, then everything goes wrong because everything is not siloed. And because of that, definitely like the team is very security minded. And it's definitely not easy to fork because like you can fork the code and like nobody's tried that specifically yet, but you can fork the code, you can fork the idea, but you can't fork like the dev's understanding of how the whole thing works, and you can't fork the risk team, right? So
Yeah, and unfortunately, I mean, Alpha Homora had some like deeper technical issues that led to the Iron Bank. I don't know. It's not even like seizure of funds, right? It's just that the Iron Bank paused back in 2021, I believe it was.
yeah, there was like a hack, and then some. This is like there was a pack, and then one protocol owed the other one money or something.
Yeah,
it's a whole complicated thing.
Yeah. So like, does the idea of like bad debt exist for Gearbox?
So we haven't had any bad debt as of yet. So in theory, right? Like, of course, when things go wrong, bad debt becomes possible in any protocol, not just Gearbox, but like literally any protocol where lending is involved. If something goes haywire, then bad debt could theoretically happen. With Gearbox, basically, it's the way that it could happen is if, for example, let's say everybody levered up on staked ETH via Lido or something, and say Lido got exploited, so the price of staked ETH went from whatever it is now, like 1,700 or whatever, to zero like immediately. Then that would be a problem because then all those people who borrowed ETH from Gearbox to stake in Lido suddenly can't pay back their debt. So those kinds of situations are the situations where bad debt could be accrued. But with Gearbox, this is why we have this idea of like, before we integrate anything, we have to make sure it's relatively safe. And it's like battle tested before we integrate it, which is why like the things that are integrated into V2 in particular at the moment are like Curve, Convex, Yearn, Lido, and some other like kind of quote unquote blue chip things.
Yeah.
And then the way that you would, sorry, go ahead.
Oh, please.
The way that you would kind of alleviate the chances of significant bad debt being incurred whilst integrating more and more things is to and this is what's coming up with V3, which is why we're also excited about V3. It's going to let us integrate a whole bunch of new stuff. The way that you do that is like you limit the total position size in the whole protocol for like newer things. So say hypothetically we wanted to integrate like what's a hot new protocol, like Maverick or something, right? Something like that. Okay,
like
it's not as
or something, right?
It's not as battle tested. It's kind of still like it hasn't been around that long. Not saying they're not safe or anything, but like maybe we're not as confident in it as we are confident in like Lido, for example. Okay, how do we make sure that how can we integrate it in a safe way? The way that we do that is, so like everybody who's borrowing USDC, only a certain amount of that borrowed funds can ape into Maverick, right?
Mhm.
So that if something happens, it's a small enough position where the liquidations and all these things can happen smoothly without the price moving down so quickly that that bad debt is incurred. Does that make sense?
Yeah.
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 So
you've
that's coming in
mentioned
V3 with the total risk size across the whole protocol for individual integrations, pools, and strategies.
Yeah. So I'm just curious because you'd mentioned the Curve ETH pool, which like obviously there had been no indications ahead of time that it was risky, but it did kind of disappear and leave a sizable black hole. How would both V2 and V3 have handled it if they had been active when Curve ETH was exploited?
So I think V2 would have probably handled it fine. And I haven't done the math on this, right? So take everything. I'm not part of the risk team. I'm just like talking out my ass. But I think V2 would have handled it fine because we're kind of we've taken like very kind of stringent risk parameters on these pools. So probably people like the people who borrowed and aped in that pool would have been liquidated before other people in other borrowing protocols would have been liquidated. And so like our liquidations would have happened before the kind of, huge crash of the token, if that makes sense. So like maybe some like bad debt could have been accrued, but probably it would have worked out okay. With V3, 100% we'd be fine. Like basically the way that we do it is like the total position size of Curve ETH would not have been that big, and it would have been okay for the whole protocol. Like the protocol would be fine because we've limited that, like the number of people who can be in that pool in the first place with leverage to some amount that we have like calculated in advance that's relatively safe. Yeah.
That's cool. And can you talk a bit more about like the journey from like V1 to V2 to V3? Like what were the kind of the big phases and learnings along the way for each that informed it?
Yeah, 100%. So Gearbox was born at basically, I think, one of the ETH globals. Mikhail, the founder, and Ivan, our favorite, lobster, and our favorite 12-year-old. And Ilga is basically like got together and built the like kind of pre V1 version. V1 came out of that pretty quickly, and V1 was more of a proof of concept. It was like, okay, there's this primitive called the credit account. You can deposit funds, other people can borrow those funds, and then do like very minimal things with the credit account, right? It was just kind of like see if this makes sense as an idea. V2 is when we kind of basically integrated a whole bunch of protocols and basically thought of it as like, okay, what are people doing in DeFi right now? Mostly it's like yield farming, right? So let's integrate a bunch of yield farms. Let's make it so that like rather than having to click 100 times to ape your money into some strategy, you can just like do it in one click using multi-call, which actually more and more different protocols are now using multi-call. But I think we're among the first, if not the first. So one-click strategies, a whole bunch of new integrations, and a focus on leverage yield farming. So V2 actually like came out of the gate pretty strong, and then that's essentially when like FTX blew up, and we all know what happened to the DeFi market from there. But it's still chugging along, and I have money in there, and everything's still working fine. And then V3 basically is like, the idea is we're going to take what worked from V2, but given the kind of broader macro yield situation, blah, 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 right, where I think a lot of DeFi, not just us, but a lot of DeFi protocols are having trouble competing on yields. when you can like get whatever 5% on just like holding USD. So on top of yields, we're also gonna like push spot trading, essentially margin trading, right? I think margin trading has been tried a bunch of times in the past in DeFi, but nobody's quite nailed it. On the other hand, like you have perps and stuff which have gotten success. So with Gearbox, we're trying to, with V3 rather, we're trying to have the best of both worlds, like a really good on-chain margin trading experience with good execution, good fills. But at the same time, you don't have the downside of like if you're trading on a perp platform, whether it's on-chain or off-chain, essentially with something like GMX, for example, and like not to shit on GMX, like good protocol, but like if you're making money trading on GMX, somebody's losing money, and that somebody is the GLP liquidity providers, right? Like, and so there's almost a situation where like they have to balance the needs of GLP with how much the traders can make. And so like if you just have bad traders, then the whole thing works, which is what we saw earlier on. But I think as smart, kind of quote unquote smart money uses your platform, right? Then you have this situation where like if traders make too much money, then liquidity providers are losing money, then they're going to pull their money out, then you don't have liquidity.
Especially in the shorts.
Right, exactly.
Yeah.
So with margin trading, you don't have that problem because you're just trading on Uniswap, which is, so you're not like kind of winning money from the house, and therefore you don't have to worry about, you know, the house exploding, which sounds dramatic, but has happened actually a bunch of times in DeFi and in like centralized exchanges, you know. So yeah, that's a good thing about kind of margin trading, and that's going to be one of the big things that we're pushing over the next few months.
Can we talk about yields? Because this has been like, I know you brought it up, and this has been like an ongoing issue across the entire space, is that like the baseline yield of like 5.5% for treasuries has really sucked a lot of liquidity out. You see like USDC TVL is just like down only. It's getting increasingly more PvP as like, you know, the same participants are fighting over smaller and smaller amounts of liquid capital. Like what, like, is there anything that can really reinvigorate this? Is it that the SDI that Maker has, or Frax also announced today in their governance forums, like SFrax, which is going to be like a DSR like product.
Right.
You also have a bunch of like RWA treasury bills coming online that could bring in these like yields into the space. I mean, is this anything that Gearbox would integrate at points?
So there's kind of two perspectives from this. I think the RWA side, if somebody can figure out how to do that in a kind of like a
Tether,
in a way that's like you don't have to KYC and all that stuff.
Yeah, like Tether, right? Yeah.
Right. And like you, like if I could just go and put my money into like some kind of yield farm essentially, but it's actually like some kind of like US government bond, right? And all the in between stuff is abstracted away, and I don't have to KYC. That kind of thing is definitely the kind of thing we would think about integrating in Gearbox. I don't think we're interested in at the moment in figuring out like all the regulatory burdens involved with at least from what I've seen so far, the way that some RWA products are being built, right? Because if it's KYC, then like what's the point? Just do it, and just do it like not through DeFi, like then it's not DeFi, right? Just do it through your bank account. It's the same.
Yeah.
And then on the kind of DAI and Frax side, I think we're definitely always open to integrating like things of that nature. I think we'll probably like we want these things to be like a bit battle tested first, and also kind of to make sure that like we want to be able to understand the risks. So we're like, once something like that has been like, so the Frax product you're talking about, once it's been running for a while and our risk team has looked at it and thought about it and kind of made sense of it and figured out where the kind of like where things could potentially go wrong and decided that those are worth it, then we would look to integrate something like that. But from my view, it's like almost none of us have kind of lived through a higher rate environment, right? It's been 15 years or whatever since we've had any kind of higher rate environment. So to some extent, I think this is just like this was the world before quantitative easing, essentially, right? Like, yeah, it's you had to compete with like government bonds, and so to me, it's like rather than rather than trying to come up with increasingly convoluted ways to bring like risk-free USD yield online or on chain rather, um, like crypto is full of degens. Let's just move up the risk curve somehow, right? And I don't know exactly how we would do that, but to me, like, okay, if you're in TradFi and you're like, oh, USD, I mean, government bonds are like paying 5%, so like if we want to like beat the kind of index or whatever, or beat the kind of uh, like risk-free rate, we have to take risk. So like how you do that, like corporate bonds, whatever, dividend stocks, that kind of thing. So like if somebody's brave enough, have a token that pays quote unquote dividends and hope Gary doesn't come for you or whatever.
Yeah.
Or like figure out a way for protocols to borrow money like corporate bonds, right? And I don't know how you kind of figure out the collateral on those kinds of things, but like those are cases where it makes sense for the rate that whoever's borrowed, that rate would be higher than the U.S. government bond rate because like people are taking on more risk, and that's real. That's like real, really how the financial world should work, kind of thing. If that makes sense.
In crypto land, we tend to either be on one side of the risk curve or the other, and there's nothing really in the middle.
Right.
Yeah, you're either
you're either aping shitcoins or you're like putting your DAI into Aave for 0.5% or whatever.
Exactly right, and there's nothing really in the middle of like what you would quote unquote like a diversified portfolio in TradFi land, and I guess that kind of makes sense, right? Like you either want to be fully in cash and making a little bit of capital, or being like super far out of the risk curve where you see outsized gains. Yeah.
But I do think that's a consequence of like everybody having lived in this zero yield environment for so long. And, potentially we'll see kind of that middle fill out as people especially on chain, as people figure out like clever mechanisms to do it, I guess. Like I'm just a freaking meme guy, so I don't really have any clever mechanisms to suggest, but if somebody comes up with it, I'll ape.
Yeah. Well, speaking of treasuries, we just had a tweet from Paulo Adorno. Did I say that right? I don't think I said that right.
Arduino, I think he said.
Arduino, yeah. Who said that Tether's exposure to U.S. treasuries is $72.5 billion. So they're a top 22 buyer globally, above the United Arab Emirates, Mexico, Australia, Spain.
Wow. That's insane, man.
I don't know if I'm a fan of Tether, but that's pretty based.
That is pretty cool. I mean, it'd be nice if we could get like audited holdings of that.
Yep.
But
not going to happen.
Maybe we don't need it, honestly.
I think to some extent, it's like, do you really want to know? Don't ask questions you don't want to know the answers to. That's what I'd say.
It's the sort of counterpoint of USDC having a tough time is that Tether's been on a roll. So something Tether's doing is working, and something USDC is doing is not working.
Well,
yeah.
Tether's opaque, right? So when Circle and USDC go through this like highly publicized Silicon Valley Bank blow up, I think that, highlighted a lot of the questions around domestically issued USD stablecoins.
Yeah.
In the fact that like because Tether is offshore and it's opaque, like if it had had these credit issues, like we never would have known. And so
Yeah.
that
I mean,
opaque,
Tether has survived
yes,
FUD so many times,
exactly.
right? And like, I think on average, it's like held up better against FUD than USDC did, because USDC you could go and see that it was like a real thing, right? Tether, they just need to like bull post, and half the people are going to believe them. So in some way, like, I don't think it's good that DeFi relies so heavily on uh, like a stable that is like so opaque. But I think in terms of just in terms of holding the peg, I think that opacity is definitely in their favor.
Yeah.
That's a good point. And also, I gotta tell you, you know, I think a lot of the sentiment around crypto Twitter and stuff about USDT is mostly like an American perspective. And Tether, I think a big chunk of its market cap and usage is on the other side of the world. And here, to be honest, people usually prefer USDT. If they're already into crypto and they're already into stablecoins, like usually they wouldn't accept any other stablecoin other than USDT, basically because it's just like it's perceived as that. And I don't know if it's because of its opacity, like Amplice said, or whatever, but it has a kind of a Lindy effect, you know?
Yeah, it's literally like that meme, like the Virgin versus the Chad meme. Like, it's literally that. USDT just like, they don't give a fuck, and they like ignore your FUD, and they keep coming back alive. You know, like yeah.
Yeah, so taking a look at the stablecoin market cap, USDC, which is this line right here, is like down only. And it looks to be bottoming out, hopefully. And you know, the majority of that has just been swapped out to Tether. I think. I mean, this is the April was the Silicon Valley Bank incident, and so after that, Tether had massive inflows of several $1 billion, and USDC had several outflows of a couple $1 billion. So
Yeah.
yeah, to be expected. And then, you know, like BUSD going out, pretty much out of business and being shut down by the feds doesn't help as well either. You know, Binance as the largest kind of market driver in the space that helps find both liquidity and price across the entire crypto ecosystem has been hampered in their quest to find like decent banking partners and decent liquidity this year, and that has affected the overall health of the market.
Yeah, what are your guys' takes on like Binance? You know, like how bad is it behind the scenes? Is everything fine? Are they insolvent? Do you believe Adam, or do you believe somebody else who's not Adam? Like, yeah, what are your takes?
I think it's like always healthy to be skeptical, but at the same time, I do think that like Binance commands the market share that it does because of its practices, both good and bad, right? So Binance has gone on this like mission to essentially become the world dominant leader in crypto trading and also payments as well too, like to move money back and forth. And that's really drawn the ire of the US government in several places, notably like with the whole Iranian fiasco where they allowed like $8 billion worth of volume to be traded for Iranians, plus a bunch of other different issues. But, you know, like the thing about Binance is that they are a global company, and like just like FTX was, if you look at their like company map, they're going to have like maybe one holding co and then like thousands of companies underneath that are in different domiciles, have different licenses and everyone. So, you know, Binance US is a different entity than Binance Liechtenstein or whatever the hell.
Binance Iran.
Yeah, Binance Iran. And, you know, maybe this is just like a non-US view of how like digital finance should be set up, because like on some level, the Chinese government has to be like quasi okay with what Binance is doing. because I'm sure they have a good amount of developers in Beijing. Like there's several other the largest crypto exchanges now are in China, with Binance, which is in Hong Kong, but I'm sure they have a lot of Beijing developers. OKX, which is primarily based in Beijing, and several of the other ones as well too, Huobi and like what do we have left in America? We have Kraken, which is kind of like a three-legged donkey at this point, and then Coinbase, which is literally fighting for survival against the feds. And it's worrying to me that if the United States does everything in its power to like shut down these trading systems, like essentially China gets free reign to develop the next decade of like decentralized digital money. And is that something that we really want? I mean, this is like a question in the sense of me being an American, but I don't really think that's the best.
Yeah. I mean, I think it's interesting. Well, here's a question. Like, do you think Binance, so if they continue to have troubles and get harassed by the US government, for example, and like you said, like the SEC trying to put Coinbase out of business, more or less, like all these things, do you think, what do you think that means for crypto? Do you think that means that like, there's never another bull market? Or do you think like people at this point are going to like migrate on chain and use decentralized things like Gearbox to like do whatever they would have done on a centralized exchange previously? Like, do you think we're well known and entrenched enough at this point in terms of like the on-chain stuff that we could function without major centralized exchanges? Or you think we're not there yet?
I don't think we're there yet, because like the exchanges act as the bridge to the real world and onboarding money into the system. And they're an essential part of like providing the liquidity flows into DeFi. Like you can't have DeFi without having the centralized exchanges, because where does the USDC and Tether and everything flow from in the first place? It's just a necessary component. Now, as for like the other services that they provide, like leverage trading or anything else, I think it's different. But on the whole, it's you have to have it, because payment needs to come from somewhere.
Yeah. Do you think so? I've had this idea in my head, not idea, but like this thought in my head that like what we actually need now is what people were kind of LARPing about when Bitcoin first came out, right? Is like, okay, now we need payments, because that closes the loop on if you could like actually use ETH or Frax or something, like some stable coin and or ETH at maybe not at your coffee shop, but like on some e-commerce sites that had like a large range of goods at the grocery store or whatever, then like you don't necessarily need on-ramps in the same way. You could hold like a large portion of your funds on chain and then just spend, and there's nothing illegal about that, right? Like that is like, you can pay for stuff in crypto, just that nobody takes it really. So like, is the next great Ponzi some kind of yield farming where if you install point of sale crypto payments in your shop, then you get tokens?
Yeah, that could be it. I mean, like we've seen a lot of growth in the POS industry. I think it would be very helpful in the United States if we switch towards like QR code payments, which are more prevalent in Asia. Like right now, if you're going to make like the most common practice for like Europors and Americans to pay for things is to like whip out a credit card or even use your phone to like use Apple Pay or Google Pay or whatever it is.
Yep.
And this is like entrenched behavior. But like if you're in Asia though, especially in China, you have like Alipay or any of the other services that they have where you just like whip out your phone and you scan a QR code and it creates the invoice and then you pay it, right?
Yep.
Which is like much more close to how Bitcoin Lightning is being set up. And the question then is like, can those systems become entrenched inside the States or like outside in Asia somewhere that, retailers would be able to take those sorts of payments. But I think it's still technically banned inside of China. So I don't know if like retailers can actually do that on a large scale. Like you couldn't. I don't know if Alipay could come out and say like, oh hey, we're taking tether payments now.
Maybe not on a large scale. Any number of things are banned in China that happen like on a daily basis, right? And basically the way that the CCP does it is like everything's banned, and then like so we can catch you if we want to catch you, basically, because you've probably done something that's banned. But like mostly we won't catch you unless you're doing something to piss off the party.
Yeah. Look, I mean, again, like the strongest use case outside of questions of long-term BTC price is stablecoins. Like if you look at any country that has like currency volatility and where the dollar is well used, like there's high crypto adoption usage. Like in Argentina or Nigeria or really anywhere where the dollar is good to have. I mean, was listening to a podcast yesterday about like in Argentina, people literally buy bricks and build their house like brick by brick instead of hanging on to their cash. And, those types of environments make it really hard to do like real estate transactions or like anything high dollar value because you're expected to make the transactions in cash. You literally have to bring like suitcases full of $100 bills to a exchange place, hopefully not get robbed. And crypto solves a lot of that. I mean, you could send somebody, use a multi-sig to send tethered to somebody, and then that's the exchange.
It always puzzles me the complete like lack of imagination that people have when they talk about like, oh, like nothing good has come out of crypto, when it's just like a specific viewpoint from a specific kind of person who lives in like the developed world, where like you don't have these problems that this technology was designed to solve, right? Like you don't have problems with hyperinflation, you don't have problems with like random authoritarian governments just taking your money for no reason. Like in Vietnam, apparently crypto is like I'm half Vietnamese. In Vietnam, crypto is apparently like it's like got the highest penetration percentage in the world. That's because the government is capricious and will just do like the money sucks, and and the lack of imagination that so many people have about how this technology can be used kind of bums me out, because you can it's not even like, oh, it's not a thought experiment. You can go to these places and people are excited about this technology because their government has failed them in the way that they've designed their money, right? Like you can make a money that's better than what the government made, then people will use it. So like now in Vietnam, and I mean, I'm sure old people still hide gold underneath their beds, but that's how they used to store like wealth, right? And now like my cousins and stuff in Vietnam, like, I mean, I'm sure they still have some physical gold, but a lot of them are like into Bitcoin, into ETH and things like that.
The issues really are going to be like dealing. I mean, it's political because of what the United States did. I mean, we just don't know about the things that the United States did in the post 9/11 world, right? Establishing FATCA, the Foreign Accounting Tax Compliance Act, establishing the Patriot Act, and other like AML, terrorist financing, surveillance systems and laws that really ended the idea of anonymous private banking, which was like widespread. Like even Switzerland gave up to the United States, right? They started disclosing the identities of account holders to the American government back in the early 2000s. Like this sort of political pressure cannot be applied in the same way that it can to crypto, and so it really provides a new outlet for like a new kind of anonymous offshore bank to exist, or like pseudo-anonymous offshore bank.
Anonymous if you're willing to use Tornado Cash.
Well, not even that. I mean, like there's obviously ways that you can move money in and out in different venues, depending on what kind of part of the world you're in as well too. Like not everybody's in the United States, and so like I'm still positive long term, because like even if the United States takes a more draconian view towards how it exerts power on the lives of its domestic citizens, there's still like 7.5 or 8.5 billion people globally that would still be able to like use and access this.
Yeah.
And the demand for these services are hardest hit in places where the controls over what can be accessed and the legality of it is in a much more gray area, right? Like you talk
Yep.
about USDT usage in Argentina, like it's very questionable there, but it's a very gray area. But everybody's already using cash, and it's already like widely known that people are using cash anyway. So
Right. It's also illegal to like exchange the peso to USD at anything other than the official rate, and people
blue
do that
rate,
all the
yeah.
time.
Yeah.
So it's like they're breaking the law anyways. Like, what's the difference?
Yeah, they break, like the Argentinians are breaking the law on a daily basis anyway. So
Right.
like, what
Yeah,
do they care for? The like crypto legislation that limits access to Tether.
Yep.
It's still going to exist. Every single Cueva is still going to offer it. And yeah, so like if we all have to live outside the United States to build and create stuff, like that's fine. Like people will still use these products. There's still billions of dollars demand for these sorts of services.
Yeah.
Yeah.
I think it's really interesting too how China's like having its cake and eating it too with Hong Kong. Like China domestically supposedly is pretty draconian, right? At least under the law, but clearly Hong Kong is trying to attract, like not only are they not like cracking down, they're doing the opposite, opening up to crypto. And I think that's because China sees it as an opportunity to like funnel talent, funnel money from the States, like people who are not happy with the way that the SEC has been handling itself, and kind of not just the SEC, but like senators and Congress people and all that stuff. And like China has this weird experimental city that they can like have a different set of laws for, and like attract talent and attract money over, whilst still kind of shielding their domestic citizens from exposure to it. It's really interesting.
It's a very good point. They want to limit their own citizens from within on some aspects, but they are for sure interested in the huge capital that's outwards. And definitely Hong Kong is a great way to get it. Like different places, like different hubs with a much more open crypto regulation are kind of a probable way that things are going to turn out, because even if and I kind of think that the US will see it, and at some point like won't give up on that capital, not financially and not the human capital itself. Like the US won't really allow the rest of the world to eat the whole cake. Like even if they're going to get it at a bit later point, like I don't think they're going to give it up. I don't think it's going to be that bleak as some people think it's going to be in the US.
I agree. I mean, like cynical people will often be like, oh, well, if the governments just wanted to shut it down, they could just like all agree to shut it down. But what they don't understand is like these states are stuck in like a prisoner's dilemma where, okay, if you all agree to like regulate along the same lines, then theoretically, like you probably could shut it down. But like somebody's going to defect, right? Because there's all this tax money, capital, talent that's like just waiting for you if you just defect. And because of that prisoner's dilemma, like I don't think we're going to see a situation where like all the governments in the world crack down on crypto at the same time. Just like it's nonsensical, right? So
yeah, we've seen this play out like a million times, where one country like Nigeria will try and ban Bitcoin, and then all that happens is it trades at a local premium until they realize that was the dumbest thing we ever did, and they unban it.
Yep, exactly. So, yeah.
It just sucks because some of us on the stream here are located in the United States, so we have to deal with our government's idiocy.
For now, eventually we'll be like, crossing the border to escape the oppression. And,
hire a coyote to take you into Mexico.
Exactly. We'll be going the opposite way. So let's talk about a few other stories. Yesterday we had the stake.com hack, which apparently was a private key exposure where the private key was probably improperly disclosed or kept somewhere, and the money, over $40 million, was stolen by someone. It looked pretty methodical as well too, as they stole the money. And really unfortunate. But the Stake co-founder Eddie Craven came out today and said the loss of funds is by no means a trivial amount. This attack has not materially affected stakes operations. And that's pretty much true. I mean, they've gotten like $2 billion worth of inflows over the past couple of years, and their like revenue keeps on growing. So I think this was probably like internal company funds, and they'll make that money back.
Have you guys gambled on stake?
No, I haven't.
Oh, you're not allowed to, right?
No, I'm not allowed.
Yeah.
It's not for U.S. Citizens as well?
Of course not. We can't do anything.
Nothing is for U.S. citizens.
You can put our money
Gearbox
into
also not for U.S.
Bank of
citizens.
America.
Please do not deposit your money. You have to sign the
Yeah.
thing. Yeah.
I haven't looked at the stats, but I think most of our audience is international. So we'll have to take a look at that.
Yeah.
But you guys have all kinds of betting websites. So how come? Like there are all kinds of ways to use Web 2 platforms for betting in the US, right?
U.S. law is crazy. Like fantasy sports was technically like banned for a long time, but recently became legal. Or no, it was gambling was banned. Fantasy sports was legal through this weird carve out. But then they just like went and updated the gambling laws recently.
Mm-hmm. Yesterday, we also had a story about Nima Capital that deleted their website after dumping 9 million Synapse tokens well before it was supposed to, calling it a VC rug. Apparently, the VC firm had received the grant of Synapse tokens from the project in return for locking $40 million worth of liquidity in Synapse. So they both pulled their liquidity and they dumped their tokens, which is very strange.
Why didn't they simply use the DeFi Llama vesting thing?
Yeah.
Can't
Like
just lock them up.
What's also interesting is that I don't know if it looks very naive as well too, because the swaps were done not through an aggregator, but just like Uniswap swaps. And so they fired off 2 transactions for, I believe, 4 million and 5 million Synapse, had extreme slippage, and that took the price all the way down from like 51 cents to like 14 cents. It was immediately bought up and arbitraged away, and a couple of MEV bots, or like MEVers. What's the term for someone who practices MEV? MEVers?
Evil?
Yeah.
Extractor.
Extractors.
MEV bots actually.
Yeah.
Pretty important.
The extractors were able to snatch up that Synapse and make a cool 7-figure profit, or on the arbitrage.
So you're telling me that some VCs actually don't know what they're doing?
Yeah.
Shocking news.
Shocking.
Yeah. Can you handle it?
What's interesting to me is like, okay, so we're talking about crypto VCs. How many of them do you think actually know how to do things on chain? And how many of them are LARPs? Like what percentage are you thinking?
The number of overall users that interact with DeFi period is pretty small, right? Like there's like a few thousand total, and there's it feels like 1 million VCs, so it has to be like a pretty small percent.
Yeah. I'd say
I guess it's probably a pretty small number of VCs if I'm getting down to it. But I still think that like 1 in 10, maybe 1 in 5 at best,
actually know how to use DeFi.
That's
sad.
Like could speed up a stuck transaction.
Stop fucking doing threads, guys, and do some transactions.
Thread or extractable value.
I agree. I think even a lot of the people who present themselves as from the blockchain industry and Web3 industry and blah blah blah, a lot of them as well, they don't know much about what's happening on chain. So within the VCs, I agree with Garrett. I think around 90% to 85% probably don't have any actual idea of what's really going on. They just really enjoy the way they are being pitched the concept of these kinds of investment, and probably the fact that on the first public sale they can already be 5x or 10x. So they're kind of looking for that.
Yeah, the crypto VC business is great, right? Like invest some money, get liquid tokens back in 6 months or less, maybe even like a week if you're lucky, and then you probably have an immediate like 100% to 200% or more gain at that point that you can swap out and just dump on the retail. But I think we're moving. If anything, the thing that I would like to see us go back to would be like the 2017 style era, just open public sales where you can send ETH off to a random contract and compete with everybody else to get tokens.
I mean, that's definitely a better, like, I didn't participate in the ICO craziness, but that model seems like fairer and better than like this weird pre-sale, like 6-month lockup nonsense that we have going on now.
Yeah.
And thinking,
I mean, the
through a little
model.
bit-
Yeah, go ahead, Garrett.
I was just gonna say, thinking through a little bit, like we saw actually like a indicator of how many VCs were exposed to like DeFi. But just given how many like C DeFi firms and like on-chain VCs got like wrecked because all their money actually turned out it was just sitting in FTX, right? Like,
Yeah. I mean, the model now is to not just like take money and give back tokens, but the successful models that I've seen are that like you take money and then you just pair it with the token and put it into Uniswap, and the people are essentially like donating their ETH to create liquidity, and in return they get tokens back.
Right.
If the typical VC analyst was controlling it, we'd see as many hacks or like missing wallet keys as Bored Ape Yacht Club, right? Like the typical VC analyst is not that smart. There's some very
the typical
smart
VC
ones,
analyst is, well, maybe not rich enough to own a Bored Ape, but yeah, basically a Bored Ape aspirant, probably, right? So that makes sense.
Yeah, I mean, there's definitely a few VCs that are value add and super smart and leading things, but there's a lot of really like dumb money in the space.
Extractive, right?
Yeah. Well, I don't mind so much that they're extractive, just that they're like unimaginative in the way that they extract.
Yeah, they just look and see what the few VCs that are good do and try and follow as quickly as they can.
Right.
Somebody in Lobsters a while back, this was like back in 2021, was actually was doing polls of Lobsters and seeing like who they thought the best VCs were. And then they ranked everybody based on like a score. They let everybody score everybody 1 to 5 and then rank them all based on like how like much qualitatively they added to like projects.
Yeah, I think that sheet is still out there somewhere.
It's somewhere, and it's a very important sheet, and it probably hasn't changed. I'll have to go find that. That was actually like those firms that are there that are at the top of the list are all still here because they're all builders. Like the best VC firms are also like builders that swapped over into being VCs, right? And
was it Paradigm that led the list? I think
Paradigm is probably on there. Delphi.
I think those two were like the only positively rated ones, and everything else is like negatively rated.
Yeah, you remember that list as well too. Yeah, there's only like 2 or 3 like super all-star VCs because they're not even. They need to be like building partners, right? They're there to like assist you to like grow the overall ecosystem and not just giving you money to pump their bags.
Yeah, but like so many VCs, like from my understanding, like they're just looking for the kind of sweetheart token deal where they can get their vested tokens before vest before the token hits the market and dump before retail has a chance. Like that's the like VC like pipe dream these days.
Yeah, exactly. They're looking for the public sale. They aren't really looking for the project. Like at least some of them. I'm not saying all of them, but there is like a specific genre of VCs who are only in it for the pump and dump of the public sale because they know that it's going to be at like a 10x price from the price they got.
What do we know? We're just like speculating.
Not that big of a cliff.
I did like to invite any of these left curve VC analysts who are like disparaging here to come on and give your counterpoint. Like if you're just a spreadsheet jockey at a VC firm, come on Leviathan, let's have a talk about what you do.
Let's go.
Yeah. So I say what you will about SBF, but like one thing that he was able to do was when he launched his Solana DEX, I don't think it was Radium. Do you guys remember the name of the DEX that he launched on Solana?
It might have been Radium.
Might have been Radium.
That sounds familiar to me.
anyways, whatever the DEX that SBF launched, when he sold these like tokens off, he sold them as like mega tokens. So they were like, you buy 1 million tokens and they'd be like wrapped as an NFT. And so there was like bonuses as long as you kept them in. But the main thing that I remember about him with that DEX is that he, it was Serum. Yeah. For the mega serums. Yeah. So like he had a 7-year vesting period on those serum tokens where there was like a 1-year cliff and then it like vested over 7 years. This is like the longest vesting period I've ever seen on any tokens in the crypto space. And he obviously bamboozled a lot of people into investing money into FTX and Serum as well too, which has gone to zero. But maybe we do need longer lockups, right? Like 2-year, 3-year cliffs with 7-year vests just to like align incentives.
Yeah, but I mean, is there capital out there? Especially right now, there's probably not capital out there willing to do that.
No.
Let's be honest. Like, how many projects? Like, there's also a problem of like there's loads of shit projects, right? That's the flip side to this. Like, you complain about VCs all you want, the number of shit projects that there are, it's just like it's unbelievable. So
yeah. But a lot of
if you like take the meeting as a VC and you're like, this guy is like shilling you some bullshit idea. They're like 7-year vesting, and then you're just kind of like looking at each other thinking like, well, this thing isn't even going to exist anymore in 7 years. So what are we talking about?
Exactly. Yeah.
By the way, is
no
that
Mhm.
Oh, go ahead.
No, go ahead.
Is that a good jumping off point, the SBF angle, to talk about the Shkreli space over the past weekend?
Oh yeah, I heard about that he was saying like he had been accepted by like the Asian gangs and he didn't really like understand that he was in prison yet. Good luck, SBF. You're going to be in there a long time. Probably won't see the light of day. We talk like it's unfortunate that he's going to prison for so long because smart guy ended up stealing billions of dollars and caused untold damage to an incredible amount of people. And if he had just tried to walk the line instead of being a complete dipshit, we would have been in a much better place today. We politically in the United States, we probably would have come out with better outcomes as well too. But he wanted to go off and fuck around and find out with stealing $9 billion.
Yeah,
so,
but I mean, he wouldn't have grown his business. I mean, quote unquote, grown his business as quickly if he weren't bullshitting his way through, right? So it's like,
yeah.
Would FTX even have been the thing that it was if they weren't just doing whatever they wanted and actually like holding customer funds? It's hard to say. Well, is there a prediction market on how long, what kind of jail sentence he's going to get?
Probably 25 years.
You think 25? You think like I would take the under on that.
Shkreli, and we previously talked about like looked at the sentencing guidelines, and he's probably going to be found guilty on most of them. And especially with these like district attorneys that are going to be pushing for maximum sentences because of the amount of losses that he incurred. The minimum base, because they have like, once you're found guilty, there's, especially at federal level, there's like a chart, right? That says like number of offenses plus the severity of the crime, and they kind of like laid on top of each other. Yeah. And they get the guidelines, right? So his guidelines are like minimum 25 years up to life, consecutive light sentences potentially.
Really?
Yeah.
I feel like, I don't know. I feel like this is going to be like a Jordan Belfort second act situation where like he actually doesn't, like, he spends some time in prison, but not that long. And he comes back out and like becomes don't defraud people, public speaker.
Yeah.
Millions yet again.
Years. Yeah. That's my guess. It's medium to light security. He's going to find his way.
How much did Jordan actually like steal though?
I know. Let's look it up.
I mean, they had, so they issued stock totaling more than $1 billion, but
200 million,
300 million,
200 million,
200 million
losses of investor money.
That's
yeah, but back then it's more money than it's.
I understand. I get it. But I think that the scale of what happened here with SBF is far, far worse.
Yeah.
And also like SBF was not just the fraud, but the embarrassment that it caused.
Exactly.
The political powers is going to
Yeah.
have deep ramifications.
And also to some very high profile people. So a lot of people have, I'm sure, have quite the resentment for everything happened with FTX after they also agreed to put their name on it, like celebrities and stuff. And for sure, like you say, like the politicians that are probably that are likely involved behind the scenes, at least some of them with their names on it, like they aren't going to be happy about it.
Yeah, you know what? We don't deserve John McAfee, and we get SBF. So guys, are you going to be using the Gnosis Pay card? It has gone live for the Europors today.
Wow.
Yeah, so
That's
you can.
cool.
So you can
No way it's still in Israel though.
It's not available in Israel?
I don't think it's available in Israel yet. Probably not, but I will check. Man, that's like that's the product I want the most. Like the simplest and like most the best utility that like the first actual utility that I want is this kind of stuff.
Mm-hmm.
Especially if it's a really like decentralized one. It's really going to be interesting. We should have them on, guys.
Yeah, it's cool. I like how they show the euro here.
Wait. So you can link like a multi-sig to this?
Yeah, you use your Gnosis Safe to hook up to your look. So you use L2 Safe, so you like drop funds in there.
Yeah.
And then it's set up in a way where you can spend it on your Visa while keeping it in the multi-sig.
Oh, sick. So I can finally like steal money from the Gearbox treasury?
Yes, exactly.
Amazing.
Yeah.
Confirm.
That's what I've been waiting for.
Oh, man, I hope this doesn't become court evidence for your trial someday.
It's not recorded, right?
No, this is alpha. This is alpha. It's called
We're
alpha.
live.
So you can go check it out. This is actually probably pretty, like if you talk about like adoption for the space, it would be something like this, like account abstracted. Somebody's going to build an account abstracted wallet plus Gnosis Pay, and it's just going to crush. Yeah.
I think that's true.
And then you'll solve the UX problem, right?
Yeah, and you get what we talked about earlier, which is like you don't have to worry about on-ramp, off-ramp anymore.
Exactly.
Just
right.
spend your shitcoins.
Yeah. Because that's kind of like the end goal, right? Is to just keep everything on chain and either flash it back to your bank account to pay down bills or to just spend it straight from on chain.
Yeah, definitely.
Yeah. So we had talked about a project called Beam last week, which I think we need more of. I think their fees are too high, but essentially you can just send money to a wallet. You send like USDC or like any crypto to a wallet and they cash it out and like send it to your bank. But I think the Gnosis Pay is probably going to be a better choice here. Beam seems for people that don't have the Coinbase card. Let's see what else we got. Oh, okay. So PUBG developers. So Josh Lee, the founder of Osmosis, said that Krafton, the developer of the game PUBG, with more than $130 million, will launch Settleless, a Cosmos-based chain designed to provide creators with a transparent settlement system. This is actually kind of controversial. Did you guys see about the Creator League, like Mr. Beast and this Creator Studio controversy that came about?
I only saw the derivative memes that everybody was posting, but I didn't have the context for it. So if you could provide the context, that would be great.
Sure. So Mr. Beast launched this like influencer-based Creator League where like the top Twitch streamers, YouTube streamers, all get together and then they play some video games with each other. And the idea was that you would buy these like creator passes that were like $20, and essentially they would give you access to a Discord. You would be able to vote with them. You would be able to do all this stuff that like we do with our NFTs, but they didn't actually tell the people that they were NFTs. Some people just found it when they were looking at the terms and conditions, and mostly about like the refunds, because they're using a company called CoinFlow to handle the transactions. So the NFTs are non-transferable, right? So when you buy them, they just stay in your account. They don't go anywhere. They're not tradable. They're just using the near blockchain to handle like this creation. And like anybody who's used a gated Discord community or Telegram community knows that like using an NFT is probably the best way to do it. It's a nice data structure, and it just makes everything easy. So a couple of people who are like hugely anti NFT have like dropped out of the league because of this, because they're using this back-end technology.
Yeah, around gamers, NFTs really have a bad name. Like gamers, like actual gamers, at least those that I know, like they just hear about it, they get mad, they get angry. They see it as an interference with their classic way of gaming, and they already got a lot of criticism about what's been happening to gaming in like the last decade. Like everything has become so incentivized and like trying to get you to pay more money as you use the game. Unlike in the good old days, like they say, you just used to buy a game and play it. Like you could you'd pay for it once and play it for like a few years. Sometimes, at least if it's a classic game. So I think that a lot of the gamers, they still perceive NFTs immediately as some kind of a way to to extract more value out of them and not provide any value yet. They don't see the good side of it yet.
Yeah, so it was Connor Dog VA. I don't know this guy. I've never heard of him. Who came out and dropped out first. He said he didn't understand the tech behind it, and he didn't know that it was blockchain technology. And it's unfortunate that he didn't know that he was using a distributed append-only database with certain like file constructs, right? Like really, really sorry, man. Like next time we'll use SQL or we'll use SQL. And
it doesn't seem that he knows much about the technology.
No, I mean, look, I get it. Like you think NFT and you immediately go to like these terrible trading things that were probably like heavily promoted by the gaming space, and people probably lost a lot of money in those things. Like if you bought a PFP NFT anytime in the past 2 years, you've probably lost money. And so, I think it's perfectly fine to be like this. I think that
I don't
like
think it's fine. I mean, how much of a fucking, I don't know, like just low agency moron do you have to be triggered by the idea of like just hearing the word blockchain, and then you just get triggered, and then you have to do a mea culpa on Twitter. Like, come on.
Oh,
this is weak.
I think it's a. I listened to some podcasts yesterday, and I'm not going to say which side of the political divide they are because it's probably pretty apparent. But this was from like a year or two ago. And it was essentially these journalists. So it was a journalist from Motherboard who essentially writes about like why Elon is the worst person in the world pretty much every day. And he also writes about how crypto is like the worst thing in the world. There's two things that he writes about. Is like why Elon is so bad, why crypto is so bad. Oh, and like why AI is bad as well too. And about
this is a technology journalist.
Yeah, he's a tech writer. Wow. But he's going on like a very well-known political podcast to talk about like crypto in general. And like the way that they talked about it was the same way that Connor talks about it here, in the sense that it's all useless. It's just used for speculation and gambling. There's nothing actually of value being built. Nobody needs it. We should just ban all of it. That sort of thing.
Earlier when I was talking about the lack of imagination with regards to like people in Argentina using like even Binance transfers or whatever, and like how that's better than what their government's done. This is the kind of lack of imagination I'm talking about. I mean, like I know the kind of person you're talking about, but that person is a pathetic, like truly a pathetic specimen of a human. And yeah, that's all I have to say about that.
Yeah. Well, I'm sure that I'm sure he's not a Linux user.
I'm sure he's not a technologist of any kind.
No.
Right?
He's a voice actor. Well, he can continue to stream and we'll just leave it at that. There was some other stuff that happened in the news, but we've been running on for more than an hour, and we want to respect everybody's time. Do you guys have anything else that you want to wrap up with?
Just chill V3 again. It's going to be great. More integrations, more leverage in your life, which everybody needs, I think. Yeah, look for also Gearbox will be out in force in Istanbul in, I think it's November. So if anybody listening, or if anybody on actually on the thing right now is in Istanbul, definitely hit us up and we can meet. Yeah, that's all.
Oh wait, I got one more start. I'm sorry, I forgot the big news of the day. And this is more like TradFi news. And we're going to turn into a Solana podcast here soon, because with the MakerDAO news, with Rune seeing the light and seeing how great Solana is, and now Visa as well too, is choosing Solana over ETH-based ecosystems to settle stablecoin payments between interbank parties. This is actually pretty big. So Visa is going to be it's like just settling accounts using USDC, and they've chosen Solana for it.
Haven't they
Interesting.
been doing testing on ETH for like ages now?
Exactly.
Yeah.
Exactly.
Like, is this Solana on top of ETH? Like, it's Solana and ETH, or is it like they're like fuck ETH, just Solana?
Just Solana here, and I think they are also looking at ETH as well too, because they've been publishing. Visa has been publishing like account abstraction, like paymaster stuff, like I'm gonna mess up his name. It's like Kui or Guy. I don't know. Like Kai, maybe Sheffield. Their team is very smart, and they have a lot of very crypto, like pro crypto people that believe in stable coins and like using it as a settlement layer, and have really been looking deep into like account abstraction, paymasters, and where Visa can essentially come in and become a dominant player.
So this is how SBF gets out of prison. They're going to need him to reboot Solana when it goes down.
Yeah, right. No, Solana doesn't need SBF anymore. No, thank you. I'd like to see, honestly, like I would like to see Solana do well in the long term. It's a great ecosystem. Tolly and the guys are like super smart over there. And I think, outside of ETH, they're probably like it's probably got the smartest group of builders anywhere in crypto.
Guys, if SBF can launch Bald from prison, then he can launch Solana blockchain from prison.
Well, we'll leave it at
slide
that.
him a pack of smokes.
Yeah. So we'll leave it at that. Maybe we can get the Visa guys on. If not, then we will be back tomorrow for another day of Leviathan news. But Amplice, thank you for being here.
Thanks for having us, or thanks for having me, rather.
Mm-hmm.
Thank you, sir.
Also, you, Garrett, and DeFi Advisor, thanks for being here as well.
Thank you, sir, for hosting. Another one was great.
And everybody at home.